good evening guys. As mentioned last time, we completed bills of exchange and today we start the next and a very important chapter called as accounts of not for profit concern. We commonly call this chapter as NPO, non-profit organization. It was the old name. So in SYJC this chapter is commonly called by the teachers and students as NPO only. Accounts of not for profit concern. Okay? Now see, first before we do this, you should know what do we mean by not for profit concern. Concern means organization. Concern here means organization. If you are into any activity, you run under a particular name, then that is called as an organization. We call it as concern. Accounts, so you all know. Not for profit. Not for profit means the concern or the organization conducts or does its business and professional activities without the motive of profit. Not for profit concern means an organization which does its business activities without intention of making profit. Now when I say there is no motive or no intention to make profit, that doesn't mean the organization will not earn profits. They will make little bit of profits to take care of your expenses. So in short, accounts for not for profit concern means maintaining accounts of organization who are doing activities where the main object is to provide services and not to make profit. Examples: your schools, colleges, other education institution approved by government, libraries, sports clubs, charitable trust, all these are a part of your NPO. Hospitals, all are part of non-profit concern or non-profit organization. So what we are going to study here is how to prepare the final accounts of these organizations who function not to make profit but to provide service. As I mentioned, when I say not to make profit, that does not mean that they will not make profit. They will make profit. See, because if you are running an hospital, you will recover money from the patients now. Now you have doctors, you have nurses, you have infrastructure, equipments like all the machines and all that, you have to take care of these expenses. From where you are going to pay the salary to doctors, from where you will pay salary to nurses, compounders, ward boys, etc. So all these expenses are to be incurred. So for that you have to recover money from the patients, and that time it is possible that you will recover a bit extra to take care of your expenses. But the main motive is not to make profit but to provide services. Hospitals, schools, colleges, libraries, charitable trust, charitable institutions, all these become a part of an account for not for profit concern. Now here what you are supposed to do is final accounts. Now we started the year, your SYJC, with final accounts only. But what final accounts we did starting the first chapter of this year was final accounts of a trading concern. You were dealing in goods. You were buying and selling goods with the main intention of making profit. It was your business. Here it is not business. Here it is an activity done with an intention of providing services. So we are going to provide final accounts of these type of organizations. Now, when we prepared final accounts of a partnership firm, what we prepared? We prepared a trading account, we prepared a profit and loss account, we prepared partners capital or current account, and we prepared balance sheet. Correct? Similar things we have to do, but it will be done in a little bit revised format. Now when I say trading account, when we prepare trading account, we prepare trading account when we deal in goods, we purchase goods, we sell goods, so we prepare trading account. Now for not for profit concern, as I told you, they are into providing services. They will not buy and sell goods. They might do a little bit of buying and selling, but that is not with a major intention of buying and selling, but it is connected with the activity. Now say for example you are into hospital, you are having a hospital. Now hospital mein you'll have to buy medicines. Why you will buy medicines? So that you can give it to patients. So such type of minor sale and purchases will be there. But there will not be major purchase and sale of goods what used to be there in final accounts of partnership funds. So there will not be any trading account nor there will be any profit and loss. What you will prepare here is, instead of the trading and profit and loss account what we used to prepare in final accounts of partnership firm, there will be something called as income and expenditure account. Income and expenditure account, you can say it is nothing but it is a combined word for trading and profit and loss. Income and expenditure account is nothing but a combined word for trading and profit and loss account. So instead of trading P&L, there will be income and expenditure. How to prepare? I'll show you when we start. And the second thing what there will be is your balance sheet. So you will have to prepare two things. One is income and expenditure account, which is a replica, or you can say which is an alternate of trading profit and loss, and the balance sheet what we used to prepare normally while doing accounts of partnership firm what we started the year with the first chapter. Okay, now see, when we did final accounts of partnership firm, in every sum they gave us the trial balance and adjustment. In every sum of partnership final accounts, they gave us the trial balance and adjustment. Now here there will not be any trial balance. Here instead of trial balance, they will give you receipt and payment account. Instead of trial balance, they will give you receipt and payment account. Now receipt and payment account is nothing but another name for cash account. Receipt and payment is nothing but it is your cash book or cash account, where on the receipt side it shows from where you got money, payment side it shows where you spent money. So receipt and payment is nothing but it is a cash book or a cash account where all the sources from where you got money are shown on the receipt side, that is the debit side, and wherever you made the payment, that is shown on the payment side where the outflow, where money goes out. So receipt and payment account will be given. Receipt side will be your left side, debit side, money comes in. Payment side will be right side, payment made, money goes out, and there will be adjustments. On the basis of receipt and payment account and adjustments, you will have to prepare final account. Okay? So today I'm starting with the base. Today I'll take very basic sum. One sum that I'm definitely doing. If time permits, I will take the second sum also today. Okay? So let's start with this chapter. A very important point. Normally this chapter till last year it was coming as a 12 mark ka compulsory question. There never used to be any options. This year also hopefully it will come 12 mark or 10 mark. Now see, there's a lot of confusion regarding the paper pattern. Few paper patterns are coming, but just wait, because there's a very high possibility that again the paper pattern might change, because still you all have another 3 odd months for your board exams to take place. So there might be some changes, but one thing is for sure, a question is going to come from this chapter for sure. Till last year, there was always a 12 mark ka compulsory question. This year also 10 marks or 12 mark will definitely come, but you know, paper pattern might change. They are given the revised pattern, but it is not 100% sure whether it will be applicable or no. And in the coming week, mostly they are going to come out with your exact date or timetable. So when it comes, the further 100% accurate details will come. Okay, so let's wait and watch. But anyway, till that time, let's start this. Now, we have covered all your major chapters till now. Final accounts, admission of partner, dissolution, bills of exchange, issue of shares. This is another chapter, accounts for not-for-profit concern. After this, the remaining chapters what are pending. Of course, we are going to do each and every chapter. Those normally used to come as optional chapter. But anyway, we are going to do that. But as per the basic paper pattern what they have given, after this chapter, 99% you can attempt full paper of practical part and majority of the objectives. Anyway, as I mentioned, whether a particular chapter, earlier also I told you, whether a particular chapter is an option or no, we don't know, but we are going to do each and every chapter. Okay? So let's start with accounts for not-for-profit concern. Today we are doing a very basic sum, but properly understand the concept. There will be important points which will slowly come towards the chapter where as and when we keep on progressing. Today I am doing a very basic sum. The sum what I am doing today is page 110, question number 8. Page 110, question number 8. Let's read the sum, then we'll see what is to be done. Dr. Abhinav Bharat, now see he is a doctor. Now normally doctor is a businessman or professional, but again they have kept it in your syllabus as a part of not for profit concern. So we don't have option, but we have to solve according to that. Okay? Started practice of medicinal practitioner on 1st April 19. He started, that means it is a new setup for him. He is new into this activity. Okay? He gives you the receipt and payment account for the year ended 31st March 20 and the adjustments. Prepare income and expenditure account and balance sheet for the year ended 31st March 20. Now see, as I told you, they will give you receipt and payment account. Receipt and payment account will be there in each and every sums. And there will be many sums where they will also give you last year ka balance sheet. Today ka sum it is not there because he started a new business. So in the question, they will give you receipt and payment account and adjustments. Along with that, in many cases, there will be last year ka balance sheet also. But that we will see when we do later on. Let's see the receipt side first. Now see what all items are there. 2 cash introduced, 2 visit fees, received from dispensary, sundry receipts, furniture, equipment, drugs, salary, rent, conveyance, stationery, electric charges, journal drawing, balances. Now see, adjustments. Receipts in arrears are visit fees 2000 and dispensary 500. See, come to the receipt side, put a mark on visit fees, put a mark on visit fees, put a mark on dispensary receipts. Receipt side pe put a mark on visit fees and put a mark on receipt from dispensary. Outstanding expenses, rent and salary. Payment side put a mark on salary and rent. Stock of drugs was 1000. Put a mark on drugs. Remember, he is a doctor. Doctor ke liye drugs is medicine. Don't think other way around. Drugs here means medicine. Okay? Then depreciate furniture 8%, equipment 500. Put a mark on furniture and equipment. Conveyance includes 40% for domestic purpose. Put a mark on conveyance. See, I'll repeat the marks. Receipt side pe visit fees, receipt from dispensary 2 marks. Payment side pe furniture, equipment, drug, salary, rent, conveyance. Okay? Marks on the first 6 items. Now listen. How you will prepare the format. See here. First side, you will take the full page for income and expenditure. This entire sum might fit on one page, but avoid it because even if it fits, it becomes too congested. So what you do, the best thing, take one page ka income and expenditure. Your columns will be expenditure, amount, income, amount. Heading will be expenditure, amount, income, amount. And in the books of Dr. Abhinav Bharat, where in final accounts we used to write trading and profit and loss account, here you will write income and expenditure account for the year ended 31st March 20. Here you will write income and expenditure account for the year ended 31st March 20. Next page, what we do, normal balance sheet in final accounts admission. Balance sheet as on 31st March 20. Liabilities amount, assets amount. Got it? So the format will be income and expenditure account and balance sheet. Clear, guys? This will be your solution ka format for each and every sum of this chapter. As I told you, we will start with the basic sums. Let's start first. Now see, look here. This is receipt and payment. Take a look at me. Receipt and payment account. What I told you, this is cash account or cash book. Left side, debit side, receipts are given. Right side, payment side, whatever payments you have made, say incurring of expenses or buying of asset is there. Now what will happen? The first step is you will have to do the posting of entire receipt and payment. You will have to do the posting of entire receipt and payment. Now this itself is an account. How is to do? when we do more normal final accounts, every item given in the trial balance, it used to go at any one place, either trading debit credit or P&L debit credit or balance sheet or capital. Same way, entire receipt and payment ka posting will go at any one place. Either it will come on the debit side of income and expenditure, or it will go on the credit side of income and expenditure, or it will come on the liability side, or it will come on the asset side. We have to see the nature of the item and then accordingly decide. Okay, now see, income and expenditure. Debit side is expenditure, credit side is income. All expenses will come on the debit side of income and expenditure. All incomes will come on the credit side of income and expenditure. And balance sheet, you all know, liabilities will come here and assets will come here. Okay? Now let's start step by step. I'll explain you each and every item logically, especially where there are new points. I'll go a little bit in detail. Okay? As I told you, first, let's start with the basic posting. Receipt side, first item. Cash introduced 25,000. Now if you see the very first line, Dr. Abhinav Bharat started business. SYJC ka business, basics of accounts. When you start business, the money with which you start business is called as what? The money with which you start business is called as capital fund. So Dr. Abhinav Bharat is bringing cash into the business. The receipt and payment account is a business. Receipt side pay, whatever money is coming in the business is reflected. So cash introduced means the money which he brought. Now in final accounts we used to call this amount as capital. Here also we will call it as capital only, but we will add an extra word to that. We will call it as capital fund. So capital introduced in accounts for not for profit concern, we will add the extra word fund. So we will call it as capital fund. We don't have to prepare capital account because it will not be of any partnership firm. This is either of a sole trader or of an organization where there are no partners. So there will not be any partners capital. Like SYJC, how we did final accounts, it will be of a sole trader or an organization which is not a partnership firm. So what you will do? Liabilities, you all know. When we prepare balance sheet, capital goes on the liability side. So what you do? Come to the first line of the liability side. Right there. Capital fund. Underline. Right there. Opening balance. Nil. Why nil? Because opening balance comes from the last year. And this fellow is starting the business first time, so there cannot be any opening balance. Opening balance will come into picture only when it is an existing business. Dr. Abhinav Bharat has started the business in the current year, so there cannot be any opening balance. Now can I say he's bringing money? So what you will do? How much is bringing? 25,000. So right there. Add, introduce. That means capital introduce 25,000. Yes. Add introduce 25,000. So opening balance nil and add introduced 25,000. Clear with this? So whenever a person brings capital, it will be added to capital. If there was opening balance sheet in the question, capital fund ka amount would have come. That we'll see at a later stage. So right now opening balance is nil. The reason is because this is a new setup started during the current year. So when you have started an activity first time in the current year, there were no activities last year because you started only in the current year. So when there are no activities in the last year, there were no closing balances. If there are no closing balances, there is no question of having any opening balances. So because it is a new setup, opening balance will be capital fund added to your capital. Next, visit fees. Now he's a doctor. Now when you are a doctor, there are two things. Either you go and see the doctor in his dispensary, or in case of emergency, if you cannot go, or if the doctor is willing to come at your home, he will come at your home, he will do your treatment and you will pay him the fees. Now whether the doctor goes at patient's home or the patient goes to the doctor's clinic. In both the cases, for the doctor it's an income. So he's a doctor, he will get fees from his patient. That for him is an income. So it will come on the credit side of income and expenditure. Okay? 10,000, there is a mark, come to the credit side, right there. By visit fees account, put in the first column 10,000, leave a line. By visit fees account, put in the inner column 10,000 and leave a line. Okay? Next, receipts from dispensary. Here the doctor went at patient's house. Now the patients are going at doctor's dispensary. Doesn't matter for doctor. For him anyway money has to come in. So again it's an income for him. There only don't forget to leave a line for visit fees. Because there was an adjustment, we put it in the inner column and left a line. Okay? By, use the same word given in the question. Receipts from dispensary, that is 30,000. By receipts from dispensary, 30,000. Sundry receipts. Now when I say receipts, matlab money coming in, and sundry means money coming from small sources. When money comes in, it is nothing but it is an income, unless and until you buy it, you take it in the form of loan or something. So sundry receipts means money received from small sources. You know, you might have subscribed for newspapers, so you get a scrap and like that. It can be any form of receipts. So nothing given, for you it is an income, so it will come on the credit side. By sundry receipts, nothing is there, so straight away, no mark I mean, so straight away take it outside. By sundry receipts, that is 5,000. By sundry receipts, 5,000. Clear guys? Got it? So see, 4 items on the receipt side. Cash introduced, went here. Visit fees, received from dispensary and sundry receipt came as an income. There are 3 sums of this type. This type of sum has never come in the board exam, but you know it is a best sum to start the chapter with and to make the concept clear. Clear? Now let's come to the payment side. Again I am repeating, this is an account. So whatever items are given, one effect is already here. We are supposed to give the second effect at a relevant place. Okay? Now, furniture. You have paid for furniture. Now we know very well, furniture is what? Furniture for us is an asset. So therefore, furniture goes on the asset side. There is a mark for depreciation. So put furniture in the inner column and leave a line. Furniture, put it in the inner column, leave a line. Okay. Next, equipment. Again, he's a doctor. He needs equipment. Sometimes doctors and hospitals will have your X-ray machines and all kit, you know, to cure, to measure the blood pressure, to measure the temperature. All these for the doctors, for the hospitals are assets. So again, equipment for a doctor is an asset. After furniture, do not forget to leave a line. Right there. Equipments, that is 10,000. Okay? Equipment, that is 10,000. Next, drugs. Now don't get mistaken by the word drugs. He is a doctor. For doctors and hospitals, drugs means nothing but medicines. The medicines which doctor gives or the hospital issues to the patients, that is called as drugs. So drugs here is nothing but medicine. You will buy medicine to be given to the patient. So first, when you buy, for you it will be an expenditure because you are buying it to be given it to the patient. So purchase of drugs is nothing but medicines. It is an expenditure. Come to the debit side of expenditure. Right there, to drugs account. There is an adjustment. Put it in the inner column and leave a line. Put it in the inner column, leave a line. Okay? So drugs for doctors and hospitals is an expenditure. Next, salaries. You are a doctor. You might be having support staff like compounders or the person who clean the clinic and all that. Maybe medium scale doctor or high doctors, they might be having nurses also with them. So you have to compensate them for their services. No? So they have the staff, so you have to pay them salary. So that for the doctor it is an expense. Even in normal final accounts, we used to take salary as an expense only. So to salaries account 12,000, put it in the inner column, leave a line. Rent. When you're doing a business activity or a professional activity in a premises which does not belong to you, then you have to pay rent. Again, rent is paid for using the space of your owner or somebody else, where the place where which you're doing the activity doesn't belong to you. So rent is a payment made to the landlord for using his space for your business or profession. Therefore, for the business, it is an expense. And again, since it is an expense, therefore, you will put it on the expenditure side. So, expenditure mein to rent account, that is 6,000. To rent account, 6,000. Conveyance. Conveyance means nothing but local traveling. You travel by an auto, you travel by cab, Ola, Uber, you travel by AC bus, all that is called as conveyance. Conveyance is nothing but local traveling. Now say for example, there's an emergency. The patient cannot go at the doctor's dispensary or clinic. So you tell the doctor to come home. In case the doctor doesn't have his own vehicle, he will take a cab and come to your place. So he has to pay for that. Ultimately he'll recover from you, but initially he has to pay. So traveling expenses of auto rickshaw, cabs and all that, for a doctor it is an expense. Conveyance is nothing but local traveling. Expense for the doctor. Come to the expenditure side. There is an adjustment. So put it in the inner column and leave a line. So to conveyance, put it in the inner column, leave a line. Next, stationery. Every businessman needs stationery. Pen, pencils, rubbers, files, box files, flat files. Doctors के cases में when you go, he will have the record of each and every patient, case papers, files. So all that for the doctor, it is an expense. Every businessman needs some or the other stationery. So for the business, it is an expenditure. So debit expenditure, no adjustment. So straight away in the second column. Where there are no marks, straight away in the second column. So to stationery account, that is 500. Electrical charges. When you go to a doctor ka dispensary, you sit in an AC. Doctor के room में भी, where his clinic room is there, will be an air conditioner, lights रहेगा, fans रहेगा. So electricity is consumed. So every month you have to pay for electricity. For the business, it is an expense. So again, you will debit. So to electrical charges, that is 5,000. To electrical charges, that is 5,000. Journals. Every professional has to subscribe for newspapers and journals. Okay? What happens now? Doctors, even if you're a doctor, you have to keep yourself upgraded. Let it be any doctor, any professional, whichever profession you are into, new things keep on coming in. So every industry has some updates to be given to the member. So doctors normally subscribe for newspapers and magazines, which they get every month from your medical association. They keep on updating the doctors about the new COVID is coming, COVID has come. So all the latest diseases, latest remedies which come, doctors are being updated. So for that they give amount every year or every month. That is your journal, or we also call it as magazines. Okay? Again, for the doctor, it is an expense. Therefore, you will put it on the expenditure side. Journals, newspapers, magazines, all for the doctors are expenses. Drawings. We know very well. What is drawings? Amount or goods withdrawn by a businessman for personal purposes called as drawings. Drawing is a personal expense. Remember, the amount which comes on the debit side of income and expenditure, the amount which comes on the debit side of income and expenditure has to be your business expense or professional expense. Drawing is not a business expense, it is a personal expense. And if you recollect SYJC का first chapter yours, partnership final accounts or even admission, drawings we used to debit partners capital. यहाँ पे there is no partners capital, so if there are any drawings will be deducted from your capital. So drawing is a personal expense. What comes here is a business expense. So drawings being a personal expense, it cannot come here, it will be adjusted or deducted from your capital. So come to capital fund, where you all have written introduce, right there, less drawings, that is 15,000. Less drawings, that is 15,000. If you all want, you all can keep the total in the same column, or you can just leave it like that. Don't take it outside, because outside we will take after adjusting the profit or loss. Clear? Next, buy balance. Now listen, what I told you, this is nothing but receipt and payment. That means cash book, cash account. Now listen, look at me very carefully. Receipt side, payment side. Receipt side, payment side. Money comes in, money goes out. Now when do we get buy balance? When the debit side is more and the credit side is less. So this balance means you have got more money and you have paid less money. So receipt and payment ka balance is always your cash and bank balance. So buy balance here means I got this much, I paid this much, and what remains is 2,000. That means total, see, the total of the receipt side is 70. So I got 70, I have paid 68. So 70 minus 68, what remains with me is 2,000. So receipt and payment account ka balance, which is here, this balance is called as debit balance. Remember that. Even though it is on the credit side, it is called as debit balance. The reason is the debit side is more and the credit side is short, so the difference has come here. So this is nothing but my cash and bank balance. For us it is an asset, so come to the asset side and write there cash and bank 2,000. Come to the asset side, write there cash and bank 2. Now listen, in case instead of buy balance, here it was to balance. That means the payment side was more. So in that case, payment is more, I have paid more money, it would have been a bank overdraft. But here, my receipt is more, payment is less. So buy balance on the receipt side means cash and bank balance on the last day of the year. Therefore, for us it is an asset. So buy balance here means asset, to balance here means a liability. Clear guys? Okay, now listen. What we did is, we posted the entire receipt and payment account. What we did, we posted the entire receipt and payment account. Now we will take adjustments one by one. Now what I told you, receipt and payment is already an account. So one effect was already given here. We gave the second effect. Now these are adjustments. Basic of final accounts. Every adjustment will have minimum 2 effects. So now one by one we will take the adjustment and give the 2 effects. Okay? Let's take one by one. First, receipt in arrears are visit fees 2,000, dispensary 500. See, receipt in arrears means money which is yet to be received. Receipt in arrear means money which I have not yet received, I am yet to receive. Let's take one by one. Visit fees. Now what is the visit fees here? 10,000. I have received 10,000. Now what the adjustment says? This 10,000 you have already got. Another 2,000 you are yet to receive. I have already received 10, another 2 you are yet to receive. See what happens when the doctor comes, he will visit, you will pay on the spot. But sometimes what happens, the doctor has to visit frequently. So doctor will say, okay, don't worry, I'll take all the money together. So 10,000 he already got, 2,000 he is yet to receive. He is yet to receive, but he has cured the patient. So receipt and arrears means income of the current year which is not yet received, it is receivable. So 10,000 has been received, another 2 is yet to be received, so we call it as receivable, and because it is an income yet to be received, we add it to visit fees. So right here, add receivable, or you can also write it as add arrears. So outside you get 12,000. Got it? That means the doctor has received 10, 2 is yet to be received, so add receivable 2,000, so 10 plus 2, 12. Now listen, 2,000 is there in the adjustment, there has to be 2 effects. One I added here. Now what is the word? Receivable. We know anything receivable for us is an asset, anything payable for us is a liability. I am yet to take money, so it is my money which I am to recover. So for me it is an asset. So the second effect of this, come to the asset side and write there visit fees receivable 2,000. Right there on the asset side, visit fees receivable 2,000. All of you all clear? Guys, I am repeating, see, add to visit fees because it is an income of the current year, and show it on the asset side because it is yet to receive. Same thing, second part, dispensary 500. You went to the doctor, you did not have money, or the doctor say you pay me later on, so some money is yet to be received by the doctor. Same logic. I already got 30, another 500 is in arrears, same. I have to receive another 500 added. So it is an income not yet received, so add receivable 500, so you get total 30,500. So 30,000 received from dispensary, to that add another 500 receivable, so 30,000 plus 500 gives you 30,500. That means I got 30, 500 I have not received, but I have cured the patient, but money is not yet received, but it is an income for the current year, so we add it. And again the same thing, 500 receivable, receivable for us is an asset. When we are yet to receive visit fees, we write it as visit fee receivable. Now this is dispensary fees, so write there dispensary fees receivable, that is 500. Dispensary fees receivable, that is 500. Clear, guys? So the two effects of the first adjustment were add to visit fees, add to dispensary. See why I am going slower, because there are two sums same type. I will discuss both the sums with you all and you all will try it at home. Such sum has never come in the board exam, but this is just a basic sum to make the concept strong. Clear? Next. Outstanding expenses, rent 500, salary 1,000. Basic, we have done this in final accounts, we have also done this in admission, we have done it many times in SYJC also. What is outstanding? Expense which is incurred but not yet paid. What was this? What we added? Receivable income which is not yet received. Same way outstanding expense means expense which is not yet paid. Let's take one by one. Rent 500. See here, this means what? I paid rent of 6,000. Another 500 is yet to be paid. Yet to be paid for the current year. So the expenditure, the amount which comes outside has to be the total expense of the current year, whether paid or payable. So 500 is my expense which is yet to be paid. So write there, add outstanding, or you can also call it as payable. So you get 6,500. Okay, and this is an expense which is yet to be paid. Income which is yet to be received, receivable asset. Expenditure which is yet to be paid, outstanding, is payable, therefore a liability. Come to the liability side. After drawings, leave 2-3 lines and write there, outstanding rent, that is 500. Getting it? You can also use the word payable, but in final accounts and all we are using the word outstanding, so we stick to the same word. Clear, guys? Next, same part, salary 1,000 outstanding. Same, I have paid salary of 12, another 1,000 is yet to be paid, so expenditure of the current year. Because it is an expense for the current year, we add it. So 12 plus 1, I get outside 13, and this one is payable. So come to the liability side. Anything payable for us is a liability. So outstanding salary 1,000. Outstanding salary 1,000. Clear? Because you have done final account, this will be a very basic adjustment. See, there are many adjustments of this chapter which are common, like outstanding expenses, prepaid expenses, depreciation, which we have done it in final accounts. Okay? Next, stock of drugs 1,000. What I told you in the starting, drugs here means what? Medicine. Drugs here means medicine. See here, the first item. How much I have spent for it? 7,000. This means, you know what? The total money which I have spent on purchase of medicine is 7,000. This means the total money which I have spent on medicine is 7,000. Now, stock of drugs is 1,000. That means the year is over on 31st March 20. The year is over on 31st March 20. I have 1,000 ka medicines lying with me. Understand this. During the year, I have purchased total medicine of 7,000, of which on the last day of the year, 1,000 ka medicine remains. Now 1,000 ka medicine remains, you will not throw it away. I will use it in the next year. Today is 31st March, tomorrow my next year starts 1st April. So I am not going to throw it away. So what happens? The figure which should come outside, the figure which should come outside has to be the amount of medicine actually used. 7,000 I have purchased. How much remains? 1. That means, can I say I have used the difference? So what you will do, the stock which remains you have not used. So because you have not used, remove it from here. The figure which has to come outside is the medicines what you have used. I bought 7. Out of 7, 1 remains. That means what? I have used 6. So what you have not used, remove it. So right there, less stock, that is 1,000. That means outside you get 6,000. Getting it done? So I purchased medicines of 7,000. Usme se 1,000 ka medicine remains. That means I have used 6. So what I have not used, I will remove it because I have not used it only. And if you have not used it, you cannot say it is your expense. So remove it. Adjustment. Second effect. 1,000 ka medicine remains. I will not throw it away. I will use it in the next year. So what happens? Like your final accounts, closing stock. It is my stock of the current year which I will use it in the next year. So my property which I will use it in the next year. Therefore for us it is an asset. So come to the asset side. Right there, stock of drugs 1,000. Come to the asset side. Right there, stock of drugs 1,000. So I'll repeat. First effect, remove it from drugs, and second effect, show it on the asset side as stock of drugs. Got it done? 7,000 ka medicine I purchased, 1,000 I did not use, so outside 6,000, and That 1000 which I did not use is an asset. It will be shown on the asset side. Depreciate furniture 8%, equipment 500. We know very well. Furniture for us, it is an asset. Furniture for us, it is an asset. Asset, as and when you keep on using, you will keep on depreciating. So what we do? Depreciation is nothing but it is the reduction in the value of asset. Depreciation is nothing but it is a reduction in the value of asset. We did in final accounts also. First effect, reduce it from the asset. Let's take one by one. Furniture 8%. Now what is my total furniture? 8,000. So the cost of using furniture is 8%. I have used it. So first effect, remove it from the asset. So below furniture, write less depreciation at the rate of 8%. Less depreciation at the rate of 8%. 8,000 into 8 upon 100. 8 8s are 64. So this will become 640. So what I get outside is 8160. 8,000 ka 8%. 8 8s are 64. So 8,000 minus 640, you get 8160. Let's do the second effect, or the second asset ka debris, then we'll give the second effect together. How much is equipment? 500. So deduct less depreciation. Amount is straight away given 500. So I get outside 9,500. Amount is straight away given. So less depreciation 500. So I get outside 9,500. Clear? So these two are reduction in the value of asset. For us, it is an expense. Because it is an expense, we will debit expenditure. How we do in final accounts? Deduct from asset, debit P&L. Same way, deduct from asset, there is no P&L. Here there is income and expenditure. So come to the debit side of income and expenditure. There are two assets. So write there, two depreciation account. Underline. On furniture, that is 640, and on equipment 500. On furniture 640 and on equipment 500. So 1140. Okay? Furniture 640 and equipment 500. Clear with this? So deduct from asset and second effect, debit income and expenditure. Clear with this, guys? Last adjustment. Conveyance includes 40% for domestic, that is personal use. Domestic means personal use. Now what is personal use? We discuss right now drawings. 40% is used for domestic. That means, see here, this 4,000 ka conveyance means doctor has spent for traveling 4,000. Now again I repeat, the figure which has to come outside here has to be your business expense. The figure which comes outside here has to be your business expense. So if there is something which is not connected with the business, you will remove it from here. If there is something which is not connected with business, you will remove it from here. So this means what? Out of 4,000, 40% is personal. That means the remaining is only for business. So 40% is personal, not for business. So remove it. Okay? Right there. Less personal use. You can show it in brackets if you want. 4,000 ka 40%. 4,000 into 40 upon 100, that is 1,600. So you get outside 2,400. 4,000 into 40 upon 100, that is 1,600. So 4,000 minus 1,600, you get outside 2,400. Clear? Now what is the 1,600? Personal use. What is personal use? Drawings. And as I told you, drawing is not a business expense, it is a personal expense. So any person expense will be deducted from capital. So come to capital fund right there. Less personal conveyance, that is 1600. Less personal conveyance, that is 1600. Bolo, clear with the posting guys and the adjustments? So I'll repeat, we did the posting of receipt and payment account first. One effect, income went on the income side, expenditure on the debit side, liability on the liability side and asset on the asset side. We did 5 adjustments. Every adjustment had 2 effects. I have explained the logic of each and every adjustment. Now the next part, balancing. Same way how we should do final accountment, trading P&L. Check which side is greater. I can clearly make out the credit side is greater. Below, take the total. 12 and 30, 50, 55, 500. No, sorry. 42, 47, 500. Yeah, 35 and 12. 47, 500. Okay. Now take the total of the debit side. 6 and 13, 19. 19 and 6, 25. 27. 6, 19, 25, 27, 27, 32, 5 and 6, 1, 6, 8, 14, 27, 33, 500, 900, 1400, 1900, 2040. 35040. Yeah. For 47 500 is the credit side ka total minus debit side 35040. Let's see. 12460. So the difference is 12,460. The difference is 12,460. Now listen, how we got 12,460? Credit side ka total was more 47,500. We wrote at both the bases. From this we deducted the debit side ka total, so we got 12,460. Final accounts of partnership firm we called it as net profit. This is net profit only, but here if there's a profit we use the word surplus. So against this write the word surplus. Surplus means your income is more, expenditure is less. That is nothing but another name for profit. In case you get a loss, we call it as a deficit. Okay? Now see, we know very well, profit we add to capital, loss we subtract. This is surplus. So iska second effect, come to capital fund, right there, add surplus 12,460. Add surplus 12,460. Now take the total of capital fund outside. Remember, there are 2 additions, 2 deductions. So 25 and 12. 30